Hello ladies and gentlemen, it is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome as always to one of my videos. And in today's video, I'll be talking about backtesting, how to backtest, and all the little nuances and things to know when it comes to backtesting a trading strategy, okay? Now, when you hear the term backtesting, okay, it can seem, I know this, it can seem from a subconscious perspective, very, very cumbersome, very laborsome, very much so, like you have to put in the effort. And yes, of course you do, and you should, because when it comes to trading, it does require confidence, okay? And in order to gain confidence, you need to be able to prove to your own eyes and your subconscious and your conscious, all of it, that the strategy works, okay? So yes, it is the laborsome process and cumbersome process as part of trading, but it is something that should be taken very, very seriously, especially if you want to start the path of becoming a profitable trader, okay? So in this video, like I said, I'm going to be talking about how to backtest and a few things that I think everyone should know when it comes to backtesting, okay? So now when it comes to backtesting, let's say, for example, you have picked a strategy, and for example, it can be a moving average crossover or divergence or whatever it may be, okay? Now is the time to spend the time on the charts and try and figure out how it works and what is the expectancy like. So I do often get the question is, how many months should I backtest? How many years should I backtest? How much data do I backtest? Well, you know, the honest answer is it is strategy dependent, but I would tell you that if you want an honest result of month by month, what is the profit expectancy of it month by month? Because this is typically how we measure it at the very least in the macro perspective. If we have positive months, if 2, 3, 4, 5 months, or if every single month is in positive, then we have a good sign. So if you are backtesting the strategy and you've got enough data that covers at least several months and it is proving to be a positive expectancy on your profits, then you do have an edge in the market, okay? So again, I would ideally suggest that you do backtest data across in the orders of months at the very least, so that you've got an idea what is expected to actually be received from the market, from the strategy, as each month goes by, okay? Now, of course, as you know, funded programs do talk about doing everything in months. For example, FTMO will talk about having a 10% profit target in 30 days, which of course is a month, and then hitting a 5% profit target in 60 days, which is 2 months. So again, it's all in the order of months. So like I said, I do highly recommend that you do actually work out the profit expectancy of the strategy in the order of months, okay? So that is the kind of data you want to backtest. And now you can backtest years if you like. Again, it's dependent on your strategy. If you're executing on 1 minute time frames, it's not going to be very, very ideal if you're going to backtest years and years worth of data. It would be very, 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 very long, okay? So again, it does require a balance, but like I said, months is best, okay? Now, when it comes to backtesting, I also do get asked the question, you know, where do I log in my results? Now, I personally prefer to use Excel, but I have actually moved on to Edgewonk, which is actually a trading journal, but also I actually like to log in my trades there and actually just use it as a platform to analyze different things. So Edgewonk is very, very good. Again, it is a paid kind of platform, but you can use Excel or you can use Notion when it comes to backtesting, okay? Now, just a quick little summary when it comes to the differences between Excel and Notion. Excel is very good because it's very, very data orientated. So you can actually create graphs and create different things that you need from the data. But Notion is a little bit more easier to use. It's not as data orientated, but again, I do recommend Notion for beginners. It is very, very handy. But again, it doesn't, again, the main crux of this, the main issue of this is that no matter what kind of platform you use, you make sure that your backtesting is quality, okay? So when it comes to backtesting, now, like I said, we've understood the time frames that you want to backtest on, but you also have to understand what are the rules of your trading strategy and be careful of something called curve fitting. So what do I mean by this? Well, let's say, for example, you have a trading strategy. One of the first things that you want to do is have a plan to trade that strategy. So on a A4 piece of paper or on Microsoft Word, for example, you want to write down black and white rules that will allow you to either enter a trade or keep out of a trade, okay? You want to make it as black and white as possible. Now, sometimes some strategies do have a little bit more discretion than others, but again, the better it is in terms of making it black and white. Say, for example, did it hit this zone and did it hit this price level, yes or no? If it is yes, then continue to place the trade. If no, don't place the trade. If it is as black and white as that, again, that is very, very good. And you want to make your trade plan like that, okay? So far we've spoken about the time frames to trade, okay, as in terms of how many we want to backtest in the order of months, but also when it comes to the trade plan, we want to make it as black and white as possible before we begin the backtesting. Okay, now also, like I said, Excel and Notion is great places to log it, but once you begin backtesting, now it comes to important point 4. Like I said earlier, I touched on it earlier, which is curve fitting. Curve fitting is essentially when you are backtesting and you start to see a trade and you think that, okay, well, this kind of doesn't fit my plan. In reality, it doesn't, but it looks like it made a lot of percentage, a lot of returns. So what you end up doing is saying, okay, yeah, I would have been in this trade because it looks really, really nice, but it does not fit the trade plan you've created, okay? Now, this is very, very dangerous. Why? Well, because number one, in the moment, you're thinking, well, you know what? It just doesn't fit my trade plan, just about, but because it's produced a great amount of return, I'll log this as an official trade into my data, okay? Now, again, what is the issue here? Is that trade does not fit your plan, which means it does not fit your edge on the market. So this is something that we all do fall in the trap of, especially at the early stage, because at the early stage, the kind of tendencies we have as traders is to want to be able to trade live as soon as possible, because we understand you can be in a trade and it has potential to make profit. But understanding that when we're backtesting, we do have to keep it as black and white and as patient as possible. It is a very, very diligent process to help us understand, hey, does this edge work? Number one, and what is the profit expectancy like? Number two, okay? So guys, do be aware of curve fitting. It's only going to do you detriment in the future, okay? So do not do it. And of course, imagine if you do curve fit and you've proved that you've got an edge on a curve fitted plan, and then you go and trade it live and it's not profitable, then you wonder why. Well, of course, it's because you curve fitted at that point. You gave yourself that false confidence to trade the plan when it didn't have an edge, or you didn't prove that it has the edge. And of course, now you're trading it, and of course, you're not really hitting that profitable months, okay? So guys, do be careful of curve fitting. Yes, it is an emotional kind of reaction when we see data that basically shows us that we can actually have a large amount of percentage in this really nice winning trade. But again, ignore that trade, let it be. You got to understand that even with trade plans, there are trades that do go and run for miles, that actually absolutely can produce fantastic percentage. But if they did not fit the plan, leave it out, okay? Again, we've got to be as honest with ourselves, because in the reality of live trading, we have the trade plan and we've got to be as black and white with it and execute as black and white with it as possible, okay? So again, like I said, guys, when it comes to backtesting, it is a very, very diligent process. You need to, number one, have a trade plan to backtest. Okay, that's the key thing. Understand how much you want to backtest. Ideally, it is in the order of months, because you want to understand what is the profit expectancy over months. Okay, number three, you can, of course, like I said, log in your trades on Excel or Notion. Okay, EdgeWonk is one of the ones that you can use too. It is a paid platform, but you can use that. But again, like I said, be careful of curve fitting. That is a very, very big issue. Now, one of the things I want to end this video on is talking about backtesting in general, okay, versus the reality of the live markets. Backtesting is essentially when you are being a data analyst, okay? That's the truth of it, right? Now, remember, you don't have the psychological emotions and you're not feeling it, because again, you're going through historical data, there's no money on the line, you're just proving that strategy works. So when you actually have proven that your strategy works and has a profitable edge, I do highly recommend either demo trading just to get used to executing or learning how to execute your trade plan, or live trading, but very, very small amounts of money just to get you in the hang of, or to begin that kind of psychological impact and understanding the emotions that you feel when live money is at risk, okay? So these are all part of the process to actually warm you up, especially for a beginner, from getting a strategy, backtesting it, and then trading into the live markets. But like I say, it can be very, very important for any trader out there that has already started to trade and is struggling with the consistency, struggling with their edge, but does want to genuinely make it work, okay? So like I said, backtesting is absolutely critical, okay? Make sure you are not curve fitting, and make sure that it is very honest, and spend times with the charts. And most importantly, remember that one of the best things about backtesting is that when you understand trading in the live markets increases, or it adds that emotional factor into your mind. Of course, you are emotional when it comes to money and you're trading live money. Backtesting provides confidence in that. Therefore, when you're placing a trade and, for example, it can come out as a loss, you are still confident that you have an edge, that it works. Why? Because you have backtested. You've not curve fitted. You spent time having months and months of data that you've backtested and proven that it has an edge. And that confidence is absolutely critical to help ensure longevity in the game, okay? So guys, there you have it. I hope you guys are backtesting. I hope you guys are being very, very crude and very critical with your trade plan, especially when it comes to testing it in historical data, and make sure that, again, like I said, no curve fitting, but when you take it into the live markets, let it be a gradual process. Try to get used to what it's like executing, and of course, understand the key importance of backtesting. It is there to not only allow you to test your strategy, it doesn't have the emotional side of trading, which again, you will experience as you actually trade live money, but it puts confidence within you. It puts confidence in these times of losses and drawdown, okay? So guys, I genuinely hope you enjoyed this video. And guys, if you had any blunders or if you had any issues when it came to your back testing when you first started, please let me know down in the description below, or sorry, comments below. Did you curve fit? Did you actually say, okay, well, you know what, this trade doesn't fit my plan quite, but you know what, I'm going to go into it because it looks like a very, very large winning trade. Also, guys, I want to tell me, where did you actually log in your results? Did you log it in Excel? Did you log it in Notion? How do you find your back testing to be? And this is across all time frames. So let me know what kind of time frames you guys like to trade, what time frames you like to execute on, because I know that some people will like executing on the hourly versus executing on the minutes. Some people execute on the seconds. Other people can execute on the days, okay? So guys, like I said, please feel free to let me know. Tell me about your back testing. How has it been? What kind of struggles did you have when it came to back testing and taking it into the live markets with your trading plan? I want to know it all. So guys, please feel free to leave a comment in the comment section below, okay? But for now, guys, I genuinely hope you all have a fantastic trading week, and I'll speak to you guys soon. Take care and peace.